Joining us on the show now is Mr. Prabhu Dhamodharan. He's head Indian Texpreneurs Federation. And Mr. Dhamodharan, thank you so much for joining us. And while I do want to talk about apparels, but first of all, a question on cotton as well, where the Indian cotton prices seems to be stabilizing after that all-time high and then a sharp dip as well. The international markets, in the meanwhile, are trading at a 5-week lows because the U.S. crop sowing production numbers seem quite positive right now. So is the crop condition as well.
Yes, ma'am. And actually, the cotton prices stabilizing at this level is a very welcome move from the industry point of view. And always buyers, we are already seeing that Chinese cotton inventory and cotton yarn inventory, both that particularly cotton yarn inventory was very low and compared to the year-on-year average and also the historic average. And international buyers are feeling that this is the bottom trend. So they are showing little more interest book yarn orders because things bottomed out already. And cotton stability is very important because domestic market always people used to buy very minimal inventory during the downside correction of cotton. Now things are stabilizing, so domestic people also getting confidence to build a reasonable level of inventory to proceed towards the festival season orders.
Fair point. Mr. Dhamodharan, also, what is the scene with the apparel exports now? Because I know the last time we spoke, you weren't sounding very enthusiastic, but US being a major market, so is China in some sense. How does India stand there? What are US numbers looking like?
Actually, the US in the monthly, our run rate is currently around $1.2 to $1.25 billion of apparel exports, even though the numbers seems to be a decent one. But volume terms, our exports are dropping already for the past 3-4 months. If you compare a simple example, one of the largest export item is T-shirts. During April 22, we exported around 9.2 crore units of T-shirts, and April 23, it came down to 7.3 crore. Our historical average will be in the range of 8 crore T-shirts. So when compared to the historical average as well as the last year, our volumes are down. We can witness similar pattern in other products also. But one positive factor is things already bottomed out because we are seeing good kind of inventory exhaustion. That is very important because all these problems started with built-up inventory in the developed markets. Now what's happening? The sales are maintaining in most of the markets. Retail sales are not contracting as feared. At the same time, they reduced drastically imports of goods. So in balance now, things are moving in right direction. By October, we are expecting a steady state. We are seeing a gradual month-on-month recovery. By October, we can expect steady state. In our own cluster, Tirupur and Coimbatore, people started booking orders. By July end, we can give a clear update on how things will pan out for until December. Regarding US market, US is a very important market, and just I'll throw some numbers. US imports $110 billion worth of goods every year, both apparel and non-apparel. Apparel alone, they used to import $85 billion worth of goods. That's equivalent of 7 lakh crore rupees in Indian rupees. And it's a huge market. 30 crore population is spending or consuming more than our 140 crore population. That's the specialty of US market. What's happening there compared to 2018 and 23, we picked some data and China was holding around 29% market share during 2018 calendar year. That market share, commanding market share dropped to 18%. There is a 11% drop in the current year. If we compare quarter on quarter also, the numbers are similar. So they lost 77,000 crores yearly business with other countries in US. Who captured this? Whatever the China lost, that's the main question.
Right.
The star in the game, Bangladesh, they captured around 3.5% market share. Translate into if we convert that into a rupee, 24,500 rupees additional business they gained every year in the US market alone. Vietnam gained 2.3%. to the tune of 16,000 crore. India gained 1.2% to the tune of 8,400 crore. And other countries also gained some, but the major gainers are Bangladesh and Vietnam. And the main reason is the urge to shift the supply chains. The sourcing destinations are more in US. Not we are not witnessing such kind of a trend in UK and Europe because still China is holding a very intact share in those markets. But US is the one market they are leaving behind, and others are catching up. So
clearly, India seems to be catching up. Yeah, as you said, you need to be working more in the Indian markets there. Mr. Dhamodharan, apologies, we are short of time here, but we get your point here because one, the cotton prices seems to be stabilizing, and two, the Indian share seems to be increasing, and that is something that India could be getting encouraged on. But with that, it's absolutely out of time on Halftime Report. Business Lunch will take all the action ahead.